Hello, it's Dale Snyder with the Snyder Group at Keller Realty here in Las Vegas. Today's topic of discussion is just going to be what's going on with the lending industry. Changes, we're just going to wrap a little bit about that. So we have Erik Wirtner with VanDyk Mortgage here to educate us all.
Well, hello, Dale. What sort of questions do you have today?
Well, I heard something about a FHA flip change. I mean, maybe we could start with that, or just changes in the industry that might impact borrowers, or where are interest rates, where are they going, just kind of fill us in a little
Super.
bit.
Well, we'll start with the flips then. FHA has had a hard stance on contributing to investors earning dividends on buying homes and quickly reselling them. And they had restricted previously a home's ability for purchase if it had been owned less than 90 days by the current seller, meaning the seller bought it at auction or bought it off a discount note through short sale and is turning around and selling it for considerably more at a profit within 90 days. And FHA took a hardline stance on that. Not every lender offered the program last year, and up until today too, it's still running. We have, and that program required 2 appraisals to be done. That was really the only difference between it and a standard FHA program. Whether the two appraisal requirement is going to be going away, it is up for debate, as they've seen that these investments are generally relatively safe. There's always a concern of why all of a sudden is this house worth $30,000 more than it was 60 days ago.
Like all the appliances are ripped out, the ACs are gone, and
Mhm.
the investor comes in and replaces them.
Yep.
So that's why. A lot
Yeah,
of times it's
and
a
we
turnkey
show
product.
sometimes the before and after, and a lot of times it's mentioned in the report as well.
Yeah.
And as far as lending in general, I mean, we've seen what rates have been doing, and the Fed has come out and said that there's going to be no rate changes or increases until the end of 2013. We're probably going to find a relatively large uptick in activity because of that. We're starting to see more refis come into play. There's going to be more purchase activity coming into play, and we're going to benefit from those interest rates being that low for a long time and for a few years after.
Okay, where are we at, roughly? I mean, I know
Well, the federal funds rate's 0. I mean, basically, they're giving the money away and nobody's paying rent on it right now. That's the real reason that things are so low. But any increase we might see is going to still be nominal. So we're going to enjoy some historic lows even after 2013. So it'll be 14 and 15 before the Fed really starts ticking it back up to thwart off inflation and keep our market more stable.
So like low 4s-ish?
Yeah, I would say we should be in the 4s through the end of 2013, and don't hold me to this, but I don't have a crystal ball, but I can give you my best prognosis.
I saw one in your pocket.
No, it fell out and shattered on the way in, thank God. Never got me anywhere. But that's my best prognosis. We should be enjoying that. And we're going to see some fluctuations like we have, where it'll move up a quarter of a point for, couple of weeks and then down again, and that has to do with the consumer confidence index that the University of Michigan releases, and also the jobs report, jobless claims. Right now, the jobless claims are really driving the market. When the jobless claims come out, and we see claims down and unemployment dropping, the stock market tends to get woken up a little bit, and as the stock market gets woken a little bit, interest rates will rise because the value of the bonds will decrease.
Got it. What about I think it was last night somebody mentioned something about the Obama administration. They're going to allow people to do, I don't know if it's a streamline refi or some sort of refi for people that are just upside down in their homes. Do you see
that's
really,
the HARP program? Yeah. And,
is that really going to happen? I mean,
yes.
Because quite honestly, a lot of these programs are just BS and nothing happens.
That's absolutely true. A lot of times
amount to anything,
Congress and the White House love to put together a program and say, hey, let's get a press release on this, but the actual, it's not executable in our market. Nobody wants it, so nobody buys it, so it sits on the shelf and gets dusty. This one, though, will. Okay. It's the HARP program, no appraisals required, most times only an automated valuation model, which is an electronic appraisal done through a computer. It saves the appraisal costs and also helps people who are, infinitely upside down. Yeah. Right now, most of the secondary market has only rolled out that program that came out last fall, up to 125% loan to value. So you could be upside down 25%, and that program's pretty readily available on the market.
So that takes out 50% of the homeowners in Vegas because they're 50 to 65% upside down.
Unfortunately, it does, and I have a lot of clients that I talk to on a daily basis that say, Erik, is the rest of the program rolled out yet? And no, it hasn't. And It's expected to be rolled out from Fannie and Freddie by about the end of March.
Okay, so if you bought in '07-ish, you might qualify. If you bought prior to that, you probably won't unless you put a substantial amount of money down.
That would be the case.
Yeah.
At the end of March, you can revisit it again with no loan-to-value restriction because it'll go over the 125%. And that is also going to be something that isn't going to be early adopted by every single lender out there. It's going to slowly matriculate down, and everybody's going to kind of take a wait see. So it'll be offered by a few places. I know we're going to offer it. And then a lot of places will say, we're going to see how it does first before we get into that product line.
Got it. Okay, well, I think that about covers it today. Once again, this is Erik Wirtner. He's also a stunt double for the Chippendales. So if you'd like to see him live, you can go there. Or if you'd like a loan, you can find him on our website.
You can find me at the website,
Thanks,
more
man.
preferably.
DaleSnyder.net under the Info tab, Preferred Vendors List. Have a fantastic day.